Hi, how are you doing? So today I will take you through property, plant and equipment under IPSAS 45. So we will start by defining what this PPE is. So when we are talking about uh, property, plant and equipment, we all know it is something fundamental in public sector. So property, plant, equipment, or simply put, PPE. What is it? PPE are the physical, tangible assets we use for more than a year to serve the public. That is what it is. The new standard IPSAS 45 now guides us on this. It replaces the old IPSAS 17 with clear rules specifically for the public sector. Think of a road grader for a county, public hospital building, military barracks, or the servers that run a government financial management system. If it is a physical item that provides a service for a long time, then it's probably a PPE. So now we will compare PPE to other IPSASes or other assets and see where there is the linkage and what can be PPE and what may not. So let us go to our next slide. PPE versus inventory. We know one of the most important steps is to correctly identify what is PPE. So this PPE, how is it then different from inventory? The key difference is consumption versus long-term use. Consumption versus long-term use. Inventory includes items that are used up quickly, usually within a year. Think of a medical supplies in government warehouse or the bitumen and culverts used for the tin road repairs. They are meant for consumption. PPE, on the other hand, is the long-lasting asset that uses that inventory. It is the hospital building where the medical supplies are used, or the heavy machinery that lays down the bitumen. So, the simple difference is inventory is consumed while PPE is used up again and again. So, in our next slide, we will compare PPE with investment property. Both share the name property. So, what is the difference? We know it all comes down to purpose. If a public entity owns a building and leases out the office space to earn rent, that building is investment property. Its purpose is to generate financial return or revenue. But if a ministry uses a building it owns for its own administrative offices, that same kind of a building becomes PPE. Its purpose is to help deliver a public service. So just ask, are we using it for our own operations or are we holding it to earn money? So in our next slide, we will compare PPE against biological assets. You may wonder, why am I comparing PPE against biological? This is a unique one. Biological assets are living things like livestock on a government ranch or trees in a state forest. Usually these are not PPE. But there is a key exception called maybe para plants. Think of tea bushes on state-run plantations. The bushes themselves, which produce tea leaves, for many years are considered PPE. The harvested tea leaves, however, are agricultural produce and that form part of inventory. Avocado trees, mango trees, all those are considered para plants. Animals used for transportation are also considered as PPE. Those in the zoo, research, all those are considered as PPE. Sniffer dogs or security dogs are also considered as PPE. All others are considered as biological assets. So in our next slide, we will compare PPE against intangible assets. While we were starting, we said PPE are tangible assets. You can touch and feel it. But what is intangible assets? We know they lack physical substance. You can't touch it like PPE. A perfect example is government financial management software. The code that makes it work is an intangible asset. But the physical hardware it runs on, the servers, the network cables, the desktop computers in the office, that's all PPE. So there's a thin line between the two. But one you can touch, the other one you cannot touch or feel. One is the software, the other one is the hardware. So let us compare PPE against leases. PPE is a relationship also. PPE versus leases. And the key difference here is ownership. The key difference here is ownership. If, for example, a ministry, say Ministry of Health leases vehicles from a local company for a 3-year public health campaign, they don't own those vehicles, they don't have those logbooks. What they have is the right to use those assets, which is accounted for differently under lease accounting and not under this IPSAS 45. So that's covered IPSAS under IPSAS 43. But if the ministry buys its own vehicles and uses them, then those are, it is PPEs. So what you own is your PPE or control. But what others own or control and they gave you for a limited time and you have listed it, then it becomes a leased asset and it won't fall under PPE in the IPSAS 45. And finally, we summarize our introduction and we say what matters. Classification matters. Classification matters. Correctly identifying an asset from the beginning is the critical first step in public asset management. Sometimes you might put something as inventory, maybe it is PP. As investment property, maybe it is PP. So we test of purpose, consumption, physical ownership. All those are what we consider and see and clarify. Getting this right is very important in financial reporting, which is essential for accountability and transparency. So with that, that is our simple introduction to IPSAS 45 property plant and equipment. Thank you for listening. We will continue with other lessons under this IPSAS 45. We'll cover all of it. Thank you and enjoy your day. Thank you.